Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, December 14th. We're seeing red across the board in the global equity markets. U.S. stocks are set to decline for the second straight day after the Federal Reserve chose not to take any action to spur the economy. The central bank left its key interest rate unchanged at an historic low range of 0 to a quarter percentage point and said it intends to keep rates at that level until mid-2013, given its expectations for the economy. Ben Bernanke and company were slightly more upbeat about the outlook, saying that the economy has been expanding moderately despite a slowdown in global growth. Some analysts had expected the Fed to change the way it communicates to the markets, providing clearer guidance on monetary policy and possibly tying interest rates to economic conditions.
Investors around the world are reacting to the lack of action from the Federal Reserve, but perhaps an even bigger negative catalyst this morning is a bond auction by Italy. The Italian Treasury had to pay a yield of nearly 6.5% to sell 3 billion euros of 5-year bonds. That's the highest rate since the country adopted the single currency. Following the auction, the euro is dropping below the psychologically important 130 level against the US dollar, the first time that's happened in nearly a year. Analysts say the decline indicates that market sentiment toward euro-based assets has taken a turn for the worse. Meanwhile, the dollar's relative strength is driving commodities prices sharply lower. Crude oil is falling nearly $2, back below $99 a barrel, and gold is falling by about 2% to around $1,630 an ounce. The front-month gold contract has now lost more than 6% of its value just this month.
The continued concerns about European leaders' ability to tackle the sovereign debt crisis are weighing on the Eurozone's image among investors. According to a new survey from Merrill Lynch Bank of America Securities, nearly half of all institutional money managers now expect that at least one country will leave the Eurozone, and a third believe that it will happen by the end of next year. Meanwhile, 70% of those surveyed predict a further downgrade of U.S. sovereign debt. That includes 48% who say it will happen as early as 2012. But the doom and gloom does not just focus on Western economies. The majority of money managers expect the global economy to weaken and earnings to fall over the next year, and nearly all of them expect China's economic growth to slow.
On the corporate front, we're likely to see some big gains in shares of Avon Products. They're up nearly 10% ahead of the bell. Late Tuesday, the company said that it will separate the roles of chairman and chief executive officer. Also keep an eye on shares of PG&E. The California utility said it will accept liability for the explosion of a natural gas pipeline last September that leveled a neighborhood and killed several people in San Bruno, a suburb of San Francisco. And finally, First Solar is tumbling more than 12% in pre-market trading. The firm lowered its profit and sales outlook for the second time and issued a weak forecast for next year. First Solar blamed continued project delays due to weather and other factors. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.